If nothing else, the greatest lesson that we can gain from this year definitely is nothing matters more than our health, time with our family, and peace of mind. But let's be honest. During the last recession, I felt lost. So I'm here tonight to empathize with those of you who felt like you missed out. And I felt like many of you felt at the end of the last recession. But I want you to know I used that as my fuel. And I promised myself that I would never get caught in another recession again and not know what to do. Because the truth is, if you look at the laws and the rules that Templeton and some of the greatest investors have followed, at the time when things are most pessimistic, those present some of our greatest opportunities. So week after week, we've done our best to give you the best information possible to get you some of the best gains. But this is my vision for all of us and my vision for you. I want us to have our freedom. And I want us to collectively as a community really master this. So if you want to master this with us, I want you to put yes in chat. Because life is short and it seems like the year only gets crazier, I want us to have more peace, more love, more kindness, and more empathy amongst each other. So I think we need to introduce some new rules of what a retirement will look like for us. So for me, I've been working on this book for a couple of weeks, and the 3 cornerstones that I'm really emphasizing for all of us is 1, only working on what we love, with who we love, and for a few hours a day. 2, 4 hours of work, 4 hours of family, 4 hours of fun, and 12 hours of peace. I'm going to be very honest. We worked too hard and sacrificed too much of our time and our lives to be tied to someone's schedule forever, to then retire at 65 and then say we're going to enjoy life then, or even wait till the kids go off to college and then enjoy life then, and then be too old to actually enjoy it. So I want to set the framework for why this is so important, because the truth is about retirement that most people don't tell you is that you can also be lonely inside of that retirement if your friends and family and those that you love are not able to do it with you. So let's pull up a retirement calculator, and I want to show you a couple things that we can do if we stay focused. So let's say you're 38 years old, and let's say you make $122,000. Let's do $125,000 a year, right? And let's say your expenses are $35,000. Got a net worth of 20 grand. Let's say you do 80% stocks, 20% bonds. And let's say we'll lower this rate and let's start small. And let's calculate. If we get an average return of 8.6%, this is the age in which you could retire. Now, I want to show you something very fascinating, because most people spend almost all the money that they bring in, no matter how much they gross, right? So let's say if you make 125 a year and you spend 115,000 in expenses. Look how long it's going to take you to retire. It's going to take you 37 years to retire. So one of the things I love to emphasize is number of shares is very important, but your rate of savings and rate of investing is much more important than picking the perfect stock. And I think we've done a great job of giving you guys that, right? But I want to emphasize this, and let's do another example. Let's say you're 42, and let's say you make $105,000 a year. And let's say your annual expenses are, let's say 33,000. 80% stocks, 20% bonds, and let's say we knock up this return and what you can get. And let's say you're averaging 14% return. By sticking to your plan, you can get there in 6 years. So, but collectively as a community, it's really important that we all do this, because what fun is it going to be if you can retire, but all the people that you love are still at work? and you don't have time to spend with them. Okay? So this is where we have some fun. And I want to ask you some questions. So let's do an accountability check-in for the year, because I want 2021 to be greater for you than 2020 was, if it wasn't amazing for you. So my first question is, did you buy shares every month? Write yes in chat if you did, or no if you didn't. Number 2, what do you wish that you bought in March and April? It's one of the greatest dips in the history of the American stock market. And I know some of you may have FOMO about it, but I'll give you a blueprint at the end what to do to never have FOMO again and be equipped with all the knowledge that you need. Number 3, did you execute when the market was at a low? Number 4, did you apply what you learned this year? I want us to stop the intellectual fapping. It's exciting to learn, but it's more important to do, right? Are you better off this year than you were last year? Number 6 is very key. This is the end-all be-all measuring stick of investing. If your strategy worked or not, what did you make? Let's not talk about theoretical gains or what could happen in the future. Let's talk about what actually was made. If you're happy with what you made, stick to the plan. If you're not satisfied or not pleased and it doesn't put you closer to your goal, let's make some adjustments. Number 7, would you make the same decisions next year as you did this year financially and what you invested in? If not, we have to make some changes. If you could have made the same results from long-term investing versus trading, would you still have traded? Because I think there's this misnomer that long-term investing is boring and you can only get 7 to 12%. Of course, there are no guarantees. Investing has considerable risks. But during these collapses, if you go look through history, so a quick homework assignment, I need you to go look during every recession over a 2-year period, what was the average return when the market went back up on the upside for individual stocks? I think you'll be elated at what some of the possibilities are. And this is the most important question. If you didn't take any action, why were you afraid? Because if we can get down to the root of it, of why you were actually afraid to take action, it would make it easier for us to help you individually and as a community. A lot of times we don't take the next step that we need to because we are afraid we are going to fail. I know, I've been there, I understand. But like I said, we come here every week to try and give you the best information that you need in order to be okay. So whether you're going for safety and indexing, or whether you want aggressive growth, technology stocks, which we've been advocating for years, that's been my formula. We're here to help you. And who says you can't get big gains from long-term investing? Let's look at what Tesla's done since April. This is all long-term investing, no trades. And I am pro trading. I love trading. But once we take our emotion out of what we love versus what is most practical and what has worked historically, long-term investing first, and then adding a cash flow bump with short-term investing is the real blueprint. Look at Amazon since April. Look at Apple. Look at Moderna. Right? So kudos to everybody in the stock club. I appreciate you guys. But this goes to show, with proper planning and holding, look at these kind of returns. These are the kind of returns that most people hope for over a lifetime. And then if quantitative easing remains in place, and then we finally get the vaccine or whatever catalyst that is going to help the virus go away in 4 or 5 years, 3 or 4 years, these companies can grow even further. And throughout this year, we've given you the complete arsenal for what you needed. So if it's your first time, you're in for a treat, I appreciate you. But let's walk through the arsenal of some of the things that we've told you to use to make you a better investor. So, number 1, To load the boat, the best and ideal price if you want to look for a place to get a bunch of shares would be the 200-day moving average. It's a classic strategy, but most don't use it. People are always looking for an edge, something new, opposed to looking at what works. Use what works. Your savings rate plus the amount that you invest plus the number of shares will determine when you will be free. So put in chat, how many shares do you need to be free? We keep talking about generational wealth, but are we taking generational action collectively? That's what I want for us. So this year has been stressful as hell, but I want to make sure that we're doing our job to make it as peaceful as possible and easy as possible to understand this, so we can all do well together as a family. Number 2, the 100-day moving average is a secondary entry point. So let's say it doesn't go to the 200 and we miss the move on the 200. We can then go to the 100. Number 3, we told you the inverted yield curve predicts the recessions 100% of the time. So once the yield curve starts to invert, we have anywhere from 12 to 48 months to actually be in a recession. And at that point, when the yield curve inverts, you need to start looking at the companies that you like and highlight the areas where you want to buy if the market drops. Number 4, 2 indexes and 2 tech. Number 5, fear and greed calculation of where to buy good companies. Only with good companies. They have to be quality. They can't be low grade, cheap companies. Number 6, we told you crashes only last less than 180 days. So if we know that the market with quantitative easing normally lasts 180 days, and since 1945, the average length of a recession is really only 11 months, we have to endure 11 months, between 180 days to 11 months of pain to enjoy a lifetime of freedom. I had a conversation with an investor who invested heavily in 2007 and heavily in 2008, and then also in 2020. I asked him if he would come on the show. He said no, he likes his privacy. I said I understand. But the gem that he did want me to share with everyone here listening tonight is that if we follow through and pass this information on to our kids and start them early, he said because of those 2 pullbacks that he's witnessed and been a part of, he's been able to secure himself, his son, his grandchildren, and the generation after. And the crazy part is he never made more than $150,000 a year in corporate. Not 1 year. It's about personal sacrifice. We've given you the fundamentals that matter. So the founder, the character of the founder and the founding team. What's the vision for the company? Their unbreakable competitive advantage. If a company does not have an unbreakable competitive advantage, they will have a hard time being a leader. They may be a secondary or third best player in the space, but they won't be a preeminent player there. Pricing model is key. They need a loyal or ravenous customer base, and then they need a catalyst for multi-decade growth. If a company can't be dominant for 20 or 30 years, you shouldn't consider it having it in your portfolio. We've also talked about how to exit and plan your exits with fib retracements. And then for generational wealth, you got to look to hold for 30 years. The blueprint is here. And the thing that I want us to focus on is eliminating the noise. There's so much misinformation and so much news that comes out every day. It almost makes you change your plan. But the best thing that you can do for yourself, your family, and then us as a community is have a plan that you do not waver from. A lot of you have been asking, is the fall of passive investing coming? I know there's some people who are beating up on it. $7 billion in outflow happened to the S&P 500 Vanguard. And even in Asia, passive investing has risen from 47.6% from 15.8% in about a decade. But look, mutual funds started in 1924. Index funds, rest in peace, John Bogle, started December 31st of 1975. Somewhere, and then FANG came, and that was the hottest thing ever, right? But at some point, there will always be a basket of companies for you to invest in. And whether you were paying attention to it or not, this entire time we've been showing you how to make your own, even with the assessment of 2 tech, 2 index. You don't need 42 companies inside your own personal portfolio. If you have 2 technology companies that you really believe in, and then 2 indexes, you have exposure to all the other companies that you think that you're missing out on. Less is more, right? Type in chat. Less is more. Because a lot of times that information happens and we take things out. And I've talked to several, even some people in Stock Club, like closed out of Tesla early in April or May because of fear. And then FOMO kicks in, it's like, should I jump in now? Let's wait. We want to take calculated measurements for when we want to buy these companies. Our job is to have the best companies in the world work for us. If you're not a better executive than Bezos or Elon, there's no reason we shouldn't have our capital working in that business to benefit us. So here's your 2021 plan. I want you to review what you invested in. I want you to write what went well. You have some big gainers. If it's a quality company, keep it, right? Third, I need you to write down what you wish you did differently. We all make mistakes, and mistakes are okay. This is how we learn. This is how we learn. We all make mistakes. Number 4, I need you to silence the outside noise. A lot of the times the people that are asking you to change your plan and say, have you considered this? And should you potentially, and I'm not telling you what to do because I'm not your advisor, but a lot of the times that isn't for your benefit. I showed you earlier an example. You guys heard us scream all year. Franklin Dynatech, QQQ, Tesla, AMD, Amazon, Nvidia, Microsoft, Apple, and other outlets and news platforms will say, well, what about this? You have to think every time that you change and take a company out of your portfolio, please write this down. This is really important. How many years of freedom are you sacrificing by taking that company out? This is a zero-sum game. You're either going to get more time or less time. There's no in between. I know with indexes, we have safety. But regardless of what happens, whether passive investing, and I know it became really hot. Of course, Money Master the Game and other outlets were a catalyst for that. Wealthfront, of course, was one of them as well. Betterment was another. But even if it goes away, you are equipped with everything that you need to know. Tie some of your money to the market itself, and then tie some to technology. And then if another industry becomes the preeminent leader, go there. If this is 1980, we would be doing oil and airlines. This is in 1970 and 1980. However. And lastly, the futures market. Now, for everyone in the free program, I know you guys don't want me to talk about the futures market. I'm not going to give away our system. I know, because you guys are going to kill me, right? I love you all dearly. To my Red Panda family, I love you from the bottom of my heart. Dream Team Apex. Final Tribe, love you guys. Alpha, love you guys. Just want to give a quick breakdown of what the futures market is. The simplest answer, and then for those of you who are on the institutional side, I know this isn't the best answer, right? But for simplicity, the futures market is you are just taking an estimate of what the future price of an asset will be. It's trading like anything else. Whenever you trade a stock, you're like, hey, I'm trading Tesla today because I think Tesla's going to go up. Great. Or if you're shorting something, Nikola, Hertz, right? You're shorting it because you think that it's going to fall. The difference is in the money that is potentially there. And I don't want to induce anyone. So of course, trading has considerable risks, right? Consult with your advisor, and most people should not trade. But let me pull up a calculator for you and just show you really quick. So like if you have, let's say you trade any penny stock or any stock, and let's say you do 33 shares. It's not a lot. And then let's say you get 21 pennies of growth. It's not much. It's not much, right? But the difference is, like, if you trade treasury market, and let's say you do like 33 shares, which are called contracts, and you get the equivalent of 21 pennies, which would be 21 ticks. you'll be looking at $21,625.25. Or if you did 33 shares of the S&P 500, and let's say you got 21 pennies equivalent, 21 ticks, to the upside, you'll make $8,662.50. But the biggest mistake in trading that I see is, for all my traders, write this down, not knowing the number of selected trades you're going to take for the year before you even begin investing. It's a huge mistake. And number two, not having a statistical edge based on data, not emotion. Don't say, well, I know I could win. Okay, if you take 100 trades, how many have you won thus far? That's your edge. And then number three, I'm going to tell you, if you long-term invest, the reason why I never worry about other asset classes is because if I'm investing long-term, I know if I get a select number of trades here, any other percentage that I need will be baked into the futures market. So for most people, like 20 trades is ideal for most. Type yes in chat if you think you could potentially win 20 trades. So like, I have to say this, but this market and every market, but particularly the futures market, punishes the impatient and rewards the disciplined investor. And this is why I stress to everyone, and especially in the sniper program, the free program, don't overtrade under any circumstances. You will always have another move. So let's walk you through an example. So if you did 33 contracts, you had 20 trades on a year, with the example that I gave you in the treasury market, if you hit all of them, let's say on a $25,000 account, let's say it may take you a year to do it, but would it not be worth a year to invest and wait for the right moves collectively? You would be at, 1,700% and some change return in a year. And then after that, I want you to take half of that money and invest it for the long term so you can get to your golden retirement faster. It's about peace of mind. It's about peace of mind. So, question of the week. What has been the opportunity cost for someone investing in bonds for these last few months versus stocks and other assets? Okay, great. And this is the reason why the classic allocation of 80-20 works so well. I know the bond market took off because the Fed was buying everything to prop the market up. But now that the market is stabilizing a little bit, we see that the bond market is sliding down. Short-term investing lesson of the week that I need you to take home. And I just touched on it, but please write this down. Map out the number of trades that you're going to take for the year and do not deviate from it. Overtrading is the cancer that kills most accounts. Most people can win 10 or 15 trades. The issue is most people don't stop at 10, 15, or 20. They end up taking 140. And brokers know that if you continue to trade, you're eventually going to blow up your account. And their job is just to make sure that you get good data. It is up to you to be responsible with how you invest. Chart of the week, S&P 500 90-year chart. There's so many people who are always talking about the market is going to crash. The data states that if we have a crash, it's going to be less than 11 months. And over time, everyone's worried about the crash, but everyone isn't worried about the rocket to the upside. 90-year historical chart. And betting against the market and waiting for a big crash is saying that the entire economy is going to erode and fall. So if you think that's going to happen, you have a case to short the market for a long period of time. But otherwise, you should be to the upside. My question of the week for you as we begin to close out. Are you here to become wealthy and become truly free as a community, or are you here to be entertained? If you are here to be wealthy and free so we can have our time, peace, happiness, let's stick to the plan. If you're here to be entertained, this may not be the best avenue for you, even though we tried to make it entertaining, right? But if you're here to be free, I need you to be dedicated to the plan, because not only are you taking care of yourself and your household, but you're inspiring the other ones around you to say, okay, I'm going to do it as well. We have to stop talking to people about investing and show them, hey, this is what I have done. And this is what worked. And that's why I show, okay, great. You can get great returns in long-term investing, right? What I wish I knew from the very beginning was, despite the intellectual complexities, this is one of the easiest paths to wealth. Tons of data, tons of things you can read, but you have to choose to go through them. It's one of the easiest asset classes to be a part of. If you ever own a business, you know owning a business is not easy nor predictable. And as we wrap up, I want to give you your homework for the week, which will help you. So I want you to write the 10 companies that performed the best over the last 10 years. I want you to write out what are the returns for VGT over the last 10 years. Ticker VGT. What is the returns of IEF over the last 10 years? What is the 10-year return of Microsoft? Number 6, I want you to make a list of 20 stocks to put on your list. I want you to make the 10-year return and write out what the 10-year return is for all of them. And then I want you to pick 5 that you want to hold for the next 10 years. Investing is not as hard as everyone makes it. For me, when I got caught in the last recession and I did not know what to do, that was my driving force. I'll give you guys a quick blueprint how to get good in any industry. It's a very short form if you don't have access to mentors. Read the top 50 books in any industry and you'll have all the knowledge that you need. It's not that hard. I'm going to be very honest. If a lot of you read Money Master the Game cover to cover and execute it, because this is what I want us to stop doing. I want us to stop saying that I don't like this. The only thing should be, okay, did this work when I executed it? That has to be our baseline. But if you read the top 50 books in the industry, you'll have all the answers that you need. I want to tell you guys from the bottom of my heart that I love you. I hope this has helped you. You have the arsenal. You have everything you need. We're here for you every single week to give you the best information in the market. I love you. My only ask of you is that you go execute, go love each other. Do what is right amongst each other. Let's change the world and let's start to enjoy life more, because if anything else, 2020 has told us life is short. There are no guarantees. For those of us that are in our 30s or 40s, we can't wait till we're 50 to hang out with our friends and family. We need bonding and community time now. We need peace now. We need happiness now. We need love now, not later. That's it. I love you guys.